right, just take a look at your 1 month HIBOR here at the moment. Once again, we are continuing to see HIBOR drop, this time at 27 basis points for your 1 month HIBOR. So we're just around 191 here at the moment. That is the lowest we've seen since May of 28th. And we are still lower now, back below LIBOR at 233. So potentially that is giving a little bit of softness for the Hong Kong dollar. We have seen the Hong Kong dollar weaken for 7 straight days now, has.
Vaughn, let's do a quick check of the latest business flash headlines. Australian wealth manager AMP says the sale of its life insurance unit is unlikely to proceed because of challenges meeting conditions required by New Zealand's central bank. AMP was targeting a $2.3 billion sale to UK-based Resolution Life, but Resolution has been unable to agree to RBNZ requirements on its New Zealand assets. The sale had been a key part of an AMP restructuring plan. Huawei is said to be ready to cut jobs at its U.S. subsidiary. The Wall Street Journal says the cuts will affect employees of FutureWay Technologies, an R&D company that employs about 850 people. The move follows President Trump's decision in May to blacklist Huawei over national security concerns. The company says the U.S. sanctions will cut its revenue by $30 billion over the next 2 years. The Boeing 737 MAX is expected to stay grounded at least into 2020. The Wall Street Journal cites sources in the FAA and pilot unions and says no firm timeline for the plane's return has been established. American Airlines and United both say they've removed the MAX from their schedules through the beginning of November. The plane has been grounded worldwide following 2 fatal crashes that killed 346 people. Vaughn.
Well, AB InBev's decision to cancel what would have been this year's hottest offering is raising questions about the appetite for share sales in Hong Kong. On Friday, the company cited prevailing market conditions as it canceled plans to raise almost $10 billion. And sources tell Bloomberg that several funds pushed AB InBev to lower the offer price and threatened to pull orders at the last minute, forcing the brewer to suspend the IPO. Let's get more now from our Asia Deals reporter, Crystal Say. She's been watching all of this. How important was this deal for the Hong Kong Exchange?
It's a big deal. It would be this year's biggest IPO after Uber. And for the Hong Kong Stock Exchange, it's also one opportunity that they attract a foreign company to list in Hong Kong. So the implication for other foreign companies to do a second listing, to do a spin-off listing, that may temper that discussions a little bit. But we're still seeing Alibaba is expecting to raise a huge IPO in Hong Kong in the third quarter, hopefully. So there is still some hope for the Hong Kong Stock Exchange to become the top exchange this year, but this has definitely tempered that.
Crystal, how much of this was down to the company's positioning in the Chinese beer market?
So this is the second biggest brewer in China after China Resources Beer. They do have a very dominant position in other markets in Asia, such as Korea, such as Australia. So they actually are rather well positioned in terms of market share. This IPO is really down to the pricing at the end of the day. They were having discussions about pricing the deal at a high end of 64 billion valuation, and that compares to a lot of the analyst estimate, and that is a lot higher than what analysts expected and what investors are willing to pay. So I think at the end of the day, it's really down to the price, and that's why we see investors sort of threaten to pull out from the deal at the last minute.
That's right. Investors saying that AB InBev needing a plan B to lower its debt. Crystal Si, thank you so much for that. Still to come. We'll take a look at the latest on the market. This is Bloomberg.